Real estate investors may be supporting the real estate market. Now, this may sound like a good thing, but this could be dangerous long term since investors don't live at the property. It would be far easier for them to default on the mortgage and let the house go into foreclosure or sell at a price well below market value just to get their investment back. So far in 2025, investors have accounted for roughly 30% of sales of both existing and newly built homes, which is the highest share on record. Now, this is according to property analytics firm Cotality, and they started tracking the sales 14 years ago. Most of these investors were small investors who owned fewer than 100 homes, as they accounted for roughly 25% of all purchases. This compares to large investors, which account for only 5% of purchases of new and existing homes. Thought this was interesting, but within the small investor space, the stronger category is those with just 3 to 9 properties, as this group has accounted for between 14 and 15% of all sales each month this year. The data also shows that the large investors like Invitation Homes and Progress Residential have become net sellers in the market and are selling more properties than they're buying. This is likely due to reduced rents from the high competition in the rental market and a softening of the overall real estate market in certain areas that has not provided the expected return that they wanted. I do worry that the small investor here has less access to good data and also too is less disciplined with their investment strategy. I think they are likely buying homes because real estate has been a good investment for the last several years, but if the market were to turn, they would be more likely to panic and sell, and they also may not have the means to continue holding the real estate. I do believe if interest rates remain high, housing prices could remain stable or perhaps even drop a little bit. It's important to remember long-term mortgage rates generally stem from longer-term debt instruments like a 10-year treasury rather than the short-term discount rate set by the Fed. I'm Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.